Alright, let's talk about Shri Jagdamba Polymers June 2025 results and more importantly, what they are telling us. So if you see the sales, this quarter came in at 141 crore. That is 16% higher than the 122 crore they made this time last year. So which means sales are growing and demand still looks healthy. But here is the catch. More sales didn't mean more profit this time. So if you see the operating profit, which dropped from 22 crore last quarter to 16 crore now, that's a 27% fall in just 3 months. And the operating margin also slipped from 18% to 12%, which means the company is spending more to make each sale and it's keeping less money from every rupee it earns. So if you see the net profit, which followed the same story, 13 crore this quarter down from 16 crore last quarter, which is a 19% drop. And compared to last year 14 crore, it is down by about 7%. Not a huge fall year on year, but definitely a step backward from where they were just a few months ago. It happened because the business makes polymer-based products, and that means it's very sensitive to raw material prices like polypropylene. If those prices go up and the company can price its own prices quickly, margins take a hit. It could also be that a bigger share of sales came from lower margin products this quarter. Either way, it's a margin squeeze and investors don't like seeing that. So, if you notice the overall health of the business, they are still making money. So, it's not a crisis. But when margins fall from 18% to 12%, that's a big drop. If this continues, profit could shrink even if sales keep going up. And that is not a great combination for long-term growth. So what could happen next? If material prices settle down or if the company can pass the higher cost to customers, we could see margins bounce back to 15 to 18% and profits would improve quickly. But if costs stay high or competition keeps prices low, we might see profits stuck at these lower levels for a while. So there are some risks we need to watch. First one is raw materials cost staying high, and the other is price competition from other players. And the last one is lower demand from big customers like packaging or textile industries. So what do you think? Can this company improve their margins while keeping sales growth strong? Let me know in the comments.